when the market takes a hit, my portfolio goes like we up now, but we was in the trenches not too long ago. So yeah, right now, year to date, I was down 37%. Y'all can see right here until we bottomed in March. I was down almost 40% on my portfolio. On the month, I'm up 8%. Year to date, I'm up 23%. Year over year, I'm up 60%. Over the past 5 years, I am up 187% in this portfolio. So long way to go, but compared to the S&P 500, we've done pretty good, fellas. We've done pretty good. I will say. What's up, everybody? Welcome to JRUS TV. If you're on my channel, we cover all things business, investing, and self-improvement content. That's something you're interested in. Consider subscribing. Leave a comment if you turn to the channel. Appreciate you tuning back in. As y'all can see by the title, revealing my entire stock portfolio. Now, what I've been showing y'all is my public portfolio, in a sense, I guess you could say, on the channel that I've been growing for you guys. But to be honest, those are the same companies I got in my private portfolio. So the returns I'm getting in the public portfolio are similar to the ones I'm getting in my private portfolio. The companies that I have on this public portfolio, pretty much the same as my private portfolio. I'm not a big believer in finding a whole bunch of different stocks and selling stocks and moving to this stock. And, you know, if I buy in a company, I'm looking to make it a large position in my portfolio, 10% plus position in my portfolio. If I'm adding it at this point, I don't really do the trading, more so long term. Now, if the thesis breaks or I really see another better play, I will sell, whether it's a loss or a profit, and move it into other companies, which I've done so far. But let's go ahead and get into the video. I'm going to be showing y'all my stock portfolio through my phone. So I'm gonna do a screen recording and I'm gonna put it probably right here somewhere. But go ahead, pull up the stock portfolio right now. This is my Russell Empire portfolio. That's in my Robinhood. This is where the majority of my capital is. So I got my Roth in here, and then my regular, my traditional brokerage account. I have my Agentic portfolio in here as well. Video coming soon, if not already out, on how I set that Agentic trading bot up. As I can see, is down 3%, so it's not doing too well. But for the portfolio, past week we're up 5%. On a month, we're up 13%. The past 3 months, we're up 56%. I was up 80% at one point on June 1st, but we did take we did pull back a little bit. I think the Nasdaq S&P fell like 5%. It was a pullback, like an accurate pullback. So that pulled us back down. Year to date, I'm up 15.5%. Nothing crazy, but we were up 30%, 33% roughly. And the reason for that is because I'm in a lot of software stocks. Majority of my portfolio is in software companies. So, half, 50% of about half of my portfolio is in software companies. I'll say 40% is in software companies. The rest is in data center, AI plays, some cyclicals, and just infrastructure. We're going to get into the specific positions after this. Next, we'll get into my Roth IRA. On the week, we're up 4.5%. On a month, we're up roughly 13%. The past 3 months, we're up 61%. Year to date, we're up 33%. So as you can see here, the Roth is actually outperforming. Year over year, 68%. All time, I'm up 119% in the Roth. So yeah, my Roth is actually outperforming. So yeah, my Roth is outperforming my traditional. But my traditional is a little bit more volatile. But I'm not worried. Once the software gets running, it's going to get to running. Next, I'm going to show you all my Blossom portfolio. So if you don't already follow me on Blossom, link is down below. It's a social media app for investors, essentially. So you can literally connect all your broker's account, so your Fidelity, your Robinhood, your SoFis, all that, into one account. I like this account because, one, I can create my own brand. I can socialize. It's a good resource for searching up different stocks, but I can see all of my portfolios in one app. Now Robinhood has it. Now I did want to show that too. Robinhood did have it. Actually, while I'm at it, I didn't show you my full portfolio too. So this is my full portfolio on Robinhood. So as you can see on the week, this includes all my accounts, that has and my some cash. So on a month, 8%, 3 months, we're up 41%. Year to date, we're up 18%. We were up 24% year to date. But yeah, so I like Blossom. It's pretty cool. Link below if you're interested in following me on Blossom. But as you can see here, John the Russell. So it's all verified. So this is all legit, guys. I ain't even lying. Yeah, so this is the overall portfolio. As you can see, I got AMD at 28% weighting in the portfolio. I have Nebius at 19% weighting in their portfolio. Zeta Global is at 16%. Palantir is at 10%. Robinhood is at 8%. Nvidia is at 6%. I recently just sold some Nvidia. Meta is at 5%, and I have ELF at roughly. And another thing I like Blossom, it shows my trades. So if you really want to follow all the trades I do, all the new investments I make, follow me on Blossom. Literally shows all my buys, my sales. As you can see here, was buying Nebius all last week. Was buying, bought some Nvidia. I don't know about Nvidia. Bought some more Nebius. As you can see, bought some more Zeta, some ELF. So you can see everything I'm trading and buying and stuff like that. Let's go back. Now, as far as holdings, you can see here, I got ELF at 4%. Now, regarding my all-time return, AMD is sitting at 351% all-time return. I have different share counts in all of my portfolios. So, one portfolio might have like 100 average, another portfolio might have 120 average. So, averaged out 350%. That's a 3.5x, which is a great multi-bagger. I see AMD hitting the thousands. I think AMD will probably be my first 10x, I believe. I think either AMD, it's definitely AMD, Nebius, or Zeta. But I think AMD gonna be the first one. Nebius is hard. It's hard. Nebius could sneak too, but I think it's gonna be AMD. I think it's gonna be AMD. Palantir, roughly 10% of the portfolio. I have a 216 all-time return on Palantir. Nvidia, roughly 6% of the portfolio. I'm sitting at 168% return. Nebius at 18% of the portfolio. I'm really over on it, but this is 88%. Like I said, I've been averaging up a lot of Nebius in that low 200, 220 range that it just dipped to the other week. I think I'll be buying Nebius from 200 all the way up to 300. I'll probably be buying that range on pullbacks and dips. Very bullish on Nebius. If I didn't average up, I will probably have close to a 200% return. If I didn't average up, I would be close to a 200% return. Robinhood at roughly 8% of the portfolio. That's a roughly 60% return. Zeta, 16% of the portfolio is only 15%. Like I said, Palantir and Zeta make up roughly 25% of their portfolio. Especially Zeta. Software has been getting hit a lot this year. So that's why, 30% is very good year to date. I've outperformed the market, so I can't complain. But I still know I have a lot of laggards in my portfolio currently. Hold on. I don't know why it flipped like that, but okay, here we go. Then I have Meta, 5.5% of the portfolio, which is down 5%. Yeah, because they've been spending a lot of money on AI capex, so they've been getting hit. Wall Street's been liking them. I personally been adding. So once Meta does go on his run, I do see it getting 10, 12% of the portfolio pretty quickly. ELF, I'm down as well, roughly 11%. I've been averaging down on ELF, buying ELF. I've been buying ELF up crazy. You feel me? It just ran up like 20% in the past week. Very sneaky, and it's not related to the AI trade. I wanted some non-tech exposure for this portfolio because it's already a high beta portfolio. So I said, let's do something, that's down, undervalued, and not in tech. And I actually use ELF products, and it's like a subscription service to me, because A lot of people, once they run out of products, they have to buy them again. They have the best prices in the market. They have incredible moat, and all that type of stuff. Bitcoin, Ethereum, crypto has crashed. Yeah, I ain't got to explain that. I'm down like 50% on that. Fubo, I'm down 76% on Fubo. Some losses. I'm down a couple grand. We just hold it out. Hopefully, I can get my money back in a couple years. Who knows? But that's an L. That's an L I took. It's all not rain and sunshine. I mean, it's all not sunshine. Celsius are now 18%. That's a small portfolio. I see LC is doing well though in the long term. Rubrik, that's the company that my AI trading bot bought. Still down 7%. So it's not doing too well, too good, but I don't have too much money. As you can see, these are small positions. But as you can see, my biggest conviction plays are the ones I have the most money in. So now I want to show you all just all-time return on this portfolio. So on the month, I'm up 1.5%. I mean, on 5 days, I'm up 1.5%. On the month, I'm up 8%. Year to date, I'm up 23%. Year over year, I'm up 60%. Over the past 5 years, I am up 187% in this portfolio. So long way to go, but compared to the S&P 500, we've done pretty good, fellas. We've done pretty good. I will say. So yeah, I'm proud of the research I've done and the risks I've taken. I've definitely taken some L's, but hey, that's part of the game, man. That's part of the game. Make sure y'all like, comment, subscribe. Let me know what y'all think about the portfolio. I am concentrated in my portfolio. I believe in only having 5 to 10 stocks in your portfolio. I have 8 now. I have 8 currently. I think that sweet spot is between 5 to 8 stocks. If I could go down to 7, 6, I would. I'm thinking ELF may be a swing trade. If it start rising up and one of like a Palette, Zeta or Nebius take a big dip, that ELF going into tech. Sorry, I'm bullish on AI. So that may be a swing trade. Stay tuned. 5 to 10 stocks. I'm more of a concentrated, the Drunken Miller approach when it comes to investing. I prefer technology companies that have good management, founder-led, revenues increasing, margins are expanding, has a good moat, a technology industry that I can understand, and a community surrounded around it. That's very important for me. A community surrounded around a stock or industry I'm looking to go into, so I can lean on other people in the community, learn more about the company, things like that. And in my opinion, it got to be a 2-3x. I prefer buying small to mid cap companies that can 2, 3, 5, maybe 10x long term. That's where I feel like I'm getting the best bang for my buck. As y'all can see in my returns, I have an okay track record of finding good companies. I have taken losses before, but when your winners win big, the losses puny. But yeah, let me know what your portfolio look like. Any suggestions? I'm open to it. I have gotten hit when the market warning too. This is not financial advice. We out. But when the market get hits, my portfolio gets hits bad. Like actually, let me show y'all right now. When the market takes a hit, my portfolio goes like we up now, but we was in the trenches not too long ago. So yeah, right now. Year to date, I was down 37%. Y'all can see right here. Until we bottomed in March, I was down almost 40% of my portfolio. That's about half, guys. That's 40% of the portfolio down. You feel me? So it's like I've trained myself to be used to volatility. Does it hurt? Yes, but I've been investing for a couple years now, few years now. I'll say about 5 years. Really started taking it seriously in 2023. Really paying attention a little more. So really 3 years. 3 years, I would say I've been in the game. Good track record. I've seen some downturns, not no recessions or nothing, but even during last year's tariff drama, we was down 30%. My portfolio got spanked. I was buying, and that's why my portfolio has grown to where it is today. JRS TV, we out. Hardest part about this investing stuff is just keeping your emotions in check. Know the companies that you own. That's why I'm able to have 5 to 8 positions because I know all of them. I don't need to over diversify. Over diversification kills your gains.